We are live. Good morning, everybody. Happy Tuesday. Welcome to the morning show here on Stock Market TV. You know the drill by now. Spencer, JC, Steve, Alfonso with you on this fine Tuesday morning. It's hot. It's been hot for like a month, it feels like. It's never going to not be hot again. You know what else is hot? The market. Well, not all the market. The indexes, but we know that below the surface, not so great. We'll talk about that. Big show today. Our guest at 9 o'clock. I've been trying to get this guy on the show for probably a year. We've rescheduled no fewer than like 5 times, not even kidding. Jake Wujastyk finally joined the show today. I'm excited to talk to Jake. He always has good charts for us, or for his followers. We'll have Kenny, we'll have Patrick. I got some stocks in my doc. JC has charts, Strazza has charts, so we'll try to cover as much of that as we can. Good morning, chat. Peter, James, Ian, Jenny from the bank. What up, Jenny from the bank? How you doing? Good to see you. Let's roll.
All right, we out here. Good morning, y'all.
Hey
guys.
Yo, how about that Billy yesterday? Up 50%. You see that thing? Woof. Shout out, Billy. Relative strength, you know, with the sell-off. This is a great lesson, because even when I was younger, I was taught that, you know, when markets are selling off and markets a bloodbath, look, see what's green, right? What stands out? Just like in very healthy markets, when everything's going up, if your stock isn't, or you're noticing a particular group of stocks or a stock that's not participating, that's a heads up. So, you know, when we saw the volatility over the past few days in cryptocurrencies and the reversals to the downside, to the upside, the whole thing, we discussed it yesterday, the relative strength in that environment stands out in the same way that it does in TradFi markets, right?
You're absolutely right, JC. And regardless of the market that we're talking about, it's times or, you know, moments or tapes where breadth is very poor, right? And the broader market is under pressure. Then you want to hunt for relative strength, because it means that much more, right? If you got a 95% down day, okay, what's the 5% that wasn't down, right? That's different from outperforming in a tape when everything's green.
Indeed. I've got some stuff that I want to talk about today. Me and Spencer going to the Orioles game tomorrow. Very excited about that. Strazza, it's your show tomorrow.
I know.
You know that? Have you heard?
I did hear this. Yeah.
I would love to know more about tomorrow, JC. Considering I'm going to be there.
Don't worry about it, Spencer. Just show up, put a smile on your face, and I'll take care of the rest. All right. Don't worry about me.
State of the market.
Baltimore's my town. All right.
I know. No, absolutely not. I will not cede Baltimore to you.
How many people do you know that love Baltimore as much as I do?
I know
that are not from Baltimore.
I know a few.
I don't know.
I know a few.
Baltimore with me is a good time.
All right, state of the markets.
All right, ladies and gentlemen, we've got the Dow futures doing absolutely nothing this morning. 39,670, still under 40,000 for the Dow, flat this morning. You've got the S&P 500 futures, 56.35 for the S&P, Strazza. 56.35. Feels like we were just at 4,000 just yesterday. 56.35, up about 20 basis points this morning, 10 handles on the S&P. NASDAQ futures up 0.25%. 20,700 for the NASDAQ futures. 30-year bond futures down, hanging in there around 118, same levels they were yesterday morning. Crude oil just under 82, down about 0.2% this morning. Copper flat, hanging around 460. Gold flat, 23.65. Silver up 1%, 31.25 for silver. The volatility index still around 12.5. And over in the old funny money, you've got Bitcoin up 1%, 57,300. Ethereum up almost 2% this morning. That's 50 points to the upside for Ethereum. That's 3,070. Solana, 141, up 1% on the day. Binance hanging in there, up 1% on the day, 515. Total crypto market cap, Spencer Israel, $2.06 trillion. Anything stand out in the futures market this morning?
You had that indecision candle really yesterday. A lot of long, lower shadows in crypto in general, but a big indecision candle of Doji and Bitcoin getting a little bit of follow through today. And is it me or are rates starting to roll over here?
You know,
Certainly
I'm watching the
feels and would make sense for it to be that way.
I'm watching the divergence here between the dollar and tens. Dollar hanging in there much better than the U.S. 10-year yield. So definitely worth watching. Right, dollar made new highs last month, and the U.S. 10-year yield nowhere near it.
It's
Nowhere
true.
near it.
It's true.
Right?
Have you seen emerging markets lately, JC?
What do you think?
You know, we talk about how, new all-time highs are just the most common characteristic of a bull market. Is it about to be a new bull market for emerging markets? Is that what we're going back to? Because we got new multi-year highs. It looks like the base is in these indexes. Do we,
I'll tell you what about emerging markets. The emerging market indexes that don't have the China in it are doing a hell of a lot better than the ones that do have the China in it.
But I even think China is starting to look a lot better.
It is, by the way. It is. That doesn't change the fact that the ones without China are looking better. You got a shit ton of Taiwan and India in the ones that don't have the China, so keep that in mind.
Yeah, a lot of it is,
which is not a bad thing.
Taiwan semi drives a lot of the performance in these indexes.
The Freedom 100 emerging markets ETF FRDM new all-time highs yesterday. Shout out Perth. Should get her back on the show.
Sure.
Nice base shaping up here in Singapore.
Singapore is not an emerging market.
No, I know. I'm just looking through my Southeast Asia list. No,
I mean it's not.
It's not. No.
But do they group it just because it's surrounded by emerging markets and it's got a lot of emerging market exposure, obviously?
Singapore is Singapore. There's nothing like it.
But they don't treat it like an emerging market in some, like, you know how like MSCI's got their rules and then FTSE's got theirs?
I don't think so. It's not an emerging market. I think it's in developed, but it's just so small. It's probably nothing.
They might. I'm gonna look into that. Not that it really matters that much.
I'll bet.
Singapore has, according to the Dr. Google, Singapore has transitioned from emerging to emerged.
Yeah,
it has now emerged.
Singapore has arrived. So
Singapore is sick.
I think that the majority of the stocks listed on the Singapore exchange are emerging market stocks, but it doesn't make Singapore an emerging market. It's a strange situation.
That's a good point.
It's a strange situation over there.
Yeah, that's a good point. Strange in all the best ways.
Yes.
Right?
Yes.
It's my wife's favorite city in Asia.
Yeah, I could see that for sure.
It's not mine.
It's just different. It feels like an American city.
What do you like better, Singapore or Hong Kong?
Hong Kong. Hong Kong was just beautiful, right? Like you feel like you're like in Hawaii or something with those islands. It's pretty.
I don't know about all that.
I've never been to Hawaii.
If you like New York, you love Hong Kong.
Yeah, Hong Kong was cool.
Right? It's like New York. You got less Puerto Ricans, fewer Jews, more Chinese people.
I was in Kuala Lumpur right now last year. We had just left Singapore because it was Sean's birthday. Shout out. Happy birthday, Sean.
Oh, happy birthday, Sean.
Happy birthday, Sean.
It was
Mumbai, but is Mumbai South? I'm talking like Southeast Asia, Harminder. Southeast Asia. Mumbai is like its own, a little over west. Can we throw up slide 2, please, my good man? This is a good chart. I'll give myself credit for this one. This is an excellent chart. I could have made the font, if you want to zoom in, I could have made the font a little bigger down there in the bottom right, couldn't I?
JC, these trends are not changing. If anything, they're just now breaking out. If you look at something like, because this is tech, this is a tech relative ratio. So if you look at equal weight technology versus equal weight S&P 500, we've been sideways for like 3 or 4 years now. It's just been a massive range. No outperformance on an equal weight basis, just about to go. And if you look at the other tech relative ratios, this is one of them. These things are just breaking out. XLK SPY is breaking out. MGK SPY, that's the Vanguard mega cap growth, breaking out. So I think it has felt like there's been all this leadership and relative strength from tech this whole cycle, but really it's just been a very, narrow participation kind of story. And I think maybe you see broadening in tech, and that relative strength actually continues, but just in a broader, healthier way.
What about the fact that the Nasdaq has no financials and S&P's got 12% financials? I tried to highlight some of the larger discrepancies here. Nasdaq's got 52% tech, S&P's 33, only 33.
But does anything else matter? Like, I think that's cool. You're showing all the differences. It's 52%.
Like the bigger differences.
Right, but it's 52% tech. At the end of the day, you're just looking at tech versus the market with this.
And another 15% communications.
Again, 65% tech then. 67% tech, whatever.
And then if you include consumer discretionary, you got another 12% consumer discretionary. One can argue there's more tech in there too.
It's like 90%. You flip through the NASDAQ 100 stocks. It's not built like the S&P 500, right? I think there's like, one utility in there? Maybe Nextera? I don't even know if Nextera's in there. No banks.
Why don't you throw up the next chart there, Spencer?
I want banks in my index these days. I want the ones with more banks. Am I crazy?
It depends which kind of banks, right? The Russell 2000's got a lot of little ones. Is that the kind of banks that you want?
No, I want the big boys.
Right.
All right, talk to me. What are you doing here, chart guy?
Well, it all comes back to how things are impacting markets, right?
Yeah.
And what I'm seeing is you had volatility among the Democratic Party over the last 10 days or so.
Yeah.
But that has not impacted the presidential betting markets at all. Surprisingly steady, right? So over on the left, you've got the flippening. The Harris flipped the Biden for the leading candidate for the Democratic Party. And then that just flipped over the last 24, 48 hours. So now it's Biden by a long shot again. But if you notice on the right, so on the left is the Democrats, on the right, you're looking at the presidential race. And then up at the top, you have Trump that's been leading the whole time, now leading by the widest margin. And then you can see that flippening between the Biden and the Harris down below with the Trump making new 52-week highs. So I find it interesting that despite the sector rotation underneath the surface in the Democratic Party, it hasn't impacted the presidential race at all as far as betting markets are concerned. And the market is reiterating that, right? The market clearly doesn't care at all about the hurricane taking place among the Democratic Party. It has priced in a Trump victory all along. It is looking at other things that are more important.
Great point. But that's why that is, right? It's the fact that Trump is at 60%, like you said, all the stuff going on about who's going to actually run in the Democratic Party doesn't matter because the market has already decided, at least for now, that the outcome is going to be Trump. He's at 60%. Maybe if Trump was at 40% and the Democrats made up the other 60%, you might see some movement. But right now, the market is not pricing in a Democratic victory. So it doesn't matter.
Also, another really interesting point, the Geo Bowden meme coin is up, has just, I don't want to misquote here, but has doubled in price in the last 48 hours. So interesting that with the flippening back to Biden over the Harris, the Geo Bowden meme token has doubled off the lows. Maybe that's a coincidence, maybe not, but that is an interesting development there. JC, so if you're not going to trade in the predicted presidential election betting markets, there's information here that we can use in other asset classes, particularly the stock market, that's reiterating that nothing has changed. Stock market's interested in more important things than the presidential election. And in the meme token, the fact that Geo Bowden has doubled during the reflippening back to the Biden, that's interesting too, right?
What happened yesterday? Why did she tank?
Oh, I don't know. I don't care about that.
I mean, that's a big move. Look at that.
Yeah.
Wow. What happened yesterday, Spencer? There had to be news.
Yeah, a meeting was canceled.
It's because she was gaining momentum. I've been hearing like they're getting ready.
Dude, there's literally headlines like every 3 hours.
Yeah, I know.
I mean,
All right.
listen, does it get back to this, guys? Look, does it get back to this? Does it get back to throw up slide 2? I mean, this is one of the greatest contrarian indicators of them all. This one just dropped 4 days ago. Throw up slide 2 there, Spencer. I mean, is it that easy? You take the other side of this?
What's this about?
That's actually pretty. That's a pretty funny cover, I got to say.
Well, ever since this magazine cover dropped, it's gone the other way, and Biden has continued to improve.
I don't know.
Like, is it that easy? Is the economists are they that terrible at everything that they do that even this, it's the exact opposite?
Do you have some skin in the game or something? Why are we this interested?
You're not interested in the fact that you had a dramatic flippening that came back, and with Trump making new 52-week highs, the stock market volatility is non-existent, and the stock market continues to make new all-time highs? That's not interesting to you?
I don't think the market's going to price in anything different than what it's currently pricing, which is a Trump victory, until we have some sort of clarity.
Okay, Monday morning quarterback. We didn't know that 2 weeks ago.
What do you mean? Yeah, we did. Yeah, we kind of did. You mean
fine? Maybe you assumed, and I did too. Fine, but we didn't know.
I don't think that was a real shock to most people who were paying attention.
We got two flippenings, and the Trump continues to make new 52-week highs, and the stock market. There's been yes, my suspicion was that the market wouldn't care because nothing changed, but the market is literally reiterating that is the case, that the stock market is much more interested in other things that have nothing to do with the presidential election. That in and of itself is new news. No?
The market doesn't care about the election right now.
Okay, but now we know that for a fact, right? We know that for a fact. We didn't 100% know that 2 weeks ago. We assumed, but now we know for a fact, right?
Listen, this is a good outcome for the market just based on history, right? This is a guy that the market knows. So you have that element of safety or clarity or certainty around policy.
Yes.
It's just like an incumbent being reelected. So that tends to be the thing.
And then is this one real? I'm here, throw up the time cover. Is this real or is this deep fake?
Vogue is right. Snapchat.
Was this a real magazine cover or was this a deep fake?
It doesn't look real, but I don't know. I have no idea, JC.
I think this might be real.
Ooh, that's a good one.
I don't know. Why? I'm with Steve. Come on, like, why are we spending so much time on this?
Why are we spending so much time? Because if the market starts to price in an unknown, that's going to spark volatility. So the market has reiterated that it knew all along nothing has changed, and that's why there's no volatility, and the market is interested in other things. That's why.
Well, can the market be interested in many things at the same time?
No question. No question. But if the Democratic Party were to bring in somebody who actually had a chance, that creates a new unknown, which creates uncertainty, which sparks volatility. The Democratic Party has not done that at all, and the market's reiterating that, which is why volatility is non-existent, and the market is interested in more important things. How about this one? How about slide 6, Spencer?
We got more?
No, and we have Kenny here. I want to actually talk about some stocks today.
This is a good one. New decade-plus lows.
Yeah, it's bad.
For healthcare on a relative basis.
Bad out there. I don't think you can't own these stocks. It's not a group of stocks we've wanted to own for a long time.
Well, I don't know about that. Eli Lilly just closed at a new all-time high yesterday. No?
I don't want to own that either.
Boston Scientific has absolutely been ripping. No?
Listen, you got the big bios and some of the big pharma companies doing really well. If you look at Johnson & Johnson, Pfizer, too many of these charts are just terrible. Even the health plan providers, which are supposed to be slow and steady, they're supposed to be the quality in that sector. They've had a tough go. Nothing's working. Medical devices got absolutely slaughtered during the last bear market. One of the hardest hit industry groups, and they've barely recovered.
Intuitive Surgical, new all-time highs.
Good. So you're always going to be able to pick some, right?
Well, getting back to the first point that we were making.
Yeah.
With healthcare making new 13-year relative lows.
Yeah, you're right.
And a lot of these stocks are under pressure. Don't the Novos and Eli's and
Stand out
Intuitive
more.
Surgicals of the world, don't they stand out?
They do. Yeah.
Boston Scientific,
Dude,
McKesson.
we got to talk about the hot corner today,
All
guys.
right.
And
Can
we
do
also
that-
missed.
Can we do that a little bit later? I
Yeah,
have
we'll get
Kenny
back to
here.
that. Let's get
We also
Kenny.
didn't talk about when we had the Pelosi filing that everybody was so excited about.
Oh,
We missed
right.
We'll talk about it. Bring
All right.
Kenny.
It's been a long time coming. They ain't come from my club, they took it. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Kenny Glick, always keeping it 100. 100. That's how the kids talk, Kenny.
I don't know anymore. Actually, I'm at the age where I don't know what the kids are saying. So
100 stacks. That's what they say. 100 stack. HUNNID. 100
All right.
stacks.
Are we still lit? Because lit is now cool again, right? Because lit was something different when I was lit. I was lit in Vegas, but I think I was lit. I was fire. I was fire and lit. What's up?
There's a new lithium ETF that's dropping. You tell me, Kenny. Not much happening at the index level this morning. Big nothing burger here on a July Tuesday. So give me what stocks are on the radar.
I don't want to scare Spencer. He said, "Can you just not mention small stocks because they get crazy." How about that?
Try to keep it above 100, Kenny.
Take a look at what Zap has become after I brought it to you guys.
Have some class, Kenny. Have some class.
Let's take a look at Zap.
ZAPP.
ZAPP. I bring it to you guys at $2 because the chart looks good. I see the volume coming in. And now, where are we now? All the kids are talking about it.
Well, it was up 120% yesterday. It's up 50% this morning, but it's still a nothing burger market cap.
Right.
But it trades, but it's liquid as hell. It traded 100 million shares yesterday.
Right. So if you buy a $2 stock and you have it at $14, I don't think anybody cares about market cap right now. But more importantly, the kids are talking about it. My son just came in and said, "Dad, before I leave," he's going back to JMU as we speak. He says his friend told him to buy this stock. I was like, okay, I'll be shorting it today. So that's amazing. The weirdest coincidence in the world. I mean, that is when that's like the Barron's article talking about how the market will never go down or blah, blah, blah. My son just asked me about this stock, and I was like, wow, that's a weird coincidence because I brought it to you guys at $2.
So then hold on. So this is an electric vehicle company from Bangkok?
So they say.
So they say. So probably not, but that's okay. Doesn't matter.
Right. So between, again, it's for me, it's the same day every day. There's a psychotic stock. There's usually 3 or 4 of them. And then we go Q's, UVXY. So if you've been doing the UVXY trade over the last 5 or 6 days, this is getting ridiculous. You're just buying Q options at the open and then go play pickleball. It really is the same day every day. I am crushing this UVXY to the point where I had to call E-Trade to see if I could get leverage on it. And they said, no, you're insane. Stop shorting this thing because they don't want you to do it. They don't want you to short this product. It's free money, my friends. But what it also is an indication that this market's not going down. And when you start to see UVXY not go down every day, 5%, maybe something will change. So I know you guys were talking about the president. Nothing matters right now, and maybe nothing will because every day it's like fill in the blank. Hey, the Qs might have been down today if it wasn't for NVIDIA. Hey, the Qs would have been down today if it wasn't for Tesla. So what's next? Then it'll be Netflix. Then it'll be Google. Then it'll be Amazon. And like I said, rookie numbers for Tom Lee. I'm going 555 on the QQQ before anybody knows what's going on. How you doing?
555 on the QQQ. So
Right.
you are looking. So you're
10%.
looking at
Another 10%.
10%. That's not a big deal.
Right, exactly. That's why when we broke over the 385 again, and I started looking at, okay, if we break the 435 and we only tack on another 12% from there, we're easily around 498 by July 5th. Voila. The market doesn't go down. What do you want it to do right now? So it really is just absolutely amazing. And when this market does turn, it'll be a day like this when we're having a normal conversation, talking about how the market's not going to go down. That doesn't mean anything. UVXY will spring to life. Woo, what's that? And the market will actually go down and break some prior day VWAPs and start breaking prior day lows. Until then, you just got to stick with the program. And then we have earnings season coming, this Thursday and Friday.
This is like Kenny's Christmas and Hanukkah and Kwanzaa and Valentine's Day all in one.
All rolled into one. Yeah. So, I mean, I'm looking forward to see what the banks have to say. But if they're gapped down in the morning and the buyers show up, we're just going to have another just leg up. So it's going to be
another name. Give one more name before you go, Kenny.
I'm still looking at. I know you. I love these ones. EOSE. Look at this ridiculous little stock. But the move has turned. The chart looked good. We're in the stock at $1.68. I can't even believe I'm talking about this. It has options, friends. You want to throw a spec play on a stock? This thing has $1 options, $2 options. I'm in a.
Do you just like it because it's got a market cap of 420?
Yeah, I could buy the entire company. I could buy Zap and this company at the end of the day. But look at the chart, and this thing has options where you could hedge yourself. I bought a $1 call for $1.10, but I was able to sell the 550s for 50 cents. So I'm sitting there with a $550 call spread for nothing. They basically paid me to do this trade. So I'm in this stock, and so far so
it's amazing.
good.
It's amazing how much options activity there is in this name. I mean, it's $400 million market cap. It's not that tiny. It's not like some of the other garbage you bring to us. But
right. And again, garbage is the key word. I don't fall in love with any of this stuff, but you know what? When they keep treating me well, like Jumama, you love JMIA, right?
Yeah.
It got smoked. We had the 750, got us to 1050. I'm thinking, here we go, break the 1250. And then the thing gets slammed back under the 750, which I was like, you know what? Maybe this thing's not going to wake up again. Boom. 3-month VWAP hold, 669. Next thing you know, you got a $9 stock. So the action in this market is phenomenal. There's always somewhere to look. But again, I stick with the Qs. I stick with the UVXY. You always have the 2 or 3 weirdo names. And then, like it'll jump right off the scanner. Who knows? QURE, like just now. That's how they come. You just see the volume spike. You take a look at what this thing is. And then you say, okay, maybe I'll keep an eye on that for the next couple of hours or a couple of days. So take a look at QURE. Just blew off my scanner just now.
So up 50%, pushing 300 million in market cap. So not that small.
Right.
All right, Kenny, I appreciate you, bro.
Yeah, man. All right, I'll see you in the room, boys. Later.
Don't be a dick, Bo Glick.
All right, later, boys.
And if you want Kenny's watch list, I just put the link in the chat. Goes out every single day. Get it.
I know we got Jake coming on. Can you just throw up slide 2 quick before we bring on Jake? I thought this was an excellent chart. Excellent. Strazza, how do you feel about this one, buddy? Look at that chart. It's a hell of a chart. See what I did there? I dropped the WAP, right? You got your anchored VWAP and the Dutch bros going back to the all-time highs. Overlaid a ratio between the Dutch brothers and Starbucks.
Bros versus Bucks.
Woo, bros versus Bucks. I like it. What do you think? Am I giving myself too much credit, or is this a dope chart?
No, it's good. I think it's on that theme too, right? Was it Sweet Greens you brought up the other day?
Yeah.
Some of these restaurants.
New 52-week highs for the Dutch bros. New 52-week highs for Dutch bros relative to the Starbucks.
These are tough to own for a long time because these things get popular. They get trendy. Their sales blow up. Their charts look great. And then 2 years later, a new thing comes out and nobody's eating there or going there for coffee anymore, and the charts fall apart. These trends are finicky, but you're always going to find the one that's, getting popular. And I guess Dutch Bros is one of them right now, along with the Sweet Greens, along with the Kava.
What about the formation here? Aren't we seeing a lot of this out there, Strazza? Big bases coming off that 21, 22 high.
Kenny was talking about EOSE.
Yeah.
This is the kind of base that, we've been this is the chart pattern that we've really been leaning on this entire cycle.
Yes. Yep. So, I mean, it just looks awfully familiar. It's the Palantir of coffee, Dr. Horton says. Agreed.
Oh, that's funny.
Agreed.
Oh,
No doubt.
JB and Kramer like it. Love that.
Oh.
Right.
Nice. Yeah, Palantir, hey, new 52-week highs.
All right, let's bring in Jake. Long time no see.
Let's do it.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Oh, Jake in the house.
Howdy do.
What's up, my man?
We're doing it. Just loving to see the market just continuing to move up as it should this time of year. So,
how much? I mean, it's a bull market, so you're probably not doing a lot of shorting these days. But generally speaking, you know, when the market environment dictates, are you doing a lot of shorting?
no, I mean, we haven't really been in an environment where it makes sense to actively kind of look at shorts. It's more or less, you know, as Brian Shannon likes to say, just kind of buy the dip and uptrends. So, you know, I've been kind of looking at looking at names that have kind of, you know, had pullbacks. One in particular that I'm looking at right now is MU, kind of on the semiconductor.
Micron.
Yep, MU semiconductor theme, which seems to be like it's gonna just continue here. You know, most of the charts are looking pretty solid. Yeah, this is the Micron chart, MU. But you know, one thing I wanted to point out is I look at these stocks, but I really look at kind of NVIDIA first because it's just been the leader the entire time. So if we can pop over to the NVIDIA chart real quick, you know, it's pretty simple the way I look at a setup, right? And this is kind of straight out of Brian Shannon's book. I always like to give him credit where it's due because he really put me on to the anchored VWAP, especially anchored VWAP pinches. And so anytime you have a pinch, it's essentially the VWAP from, you know, a swing high and a swing low. In this case, it's the May 23rd gap up. That's where we're anchoring the VWAP from the for the bottom of the pinch, and then the June 20th pivot is the top of the pinch. And really, you know, an anchored VWAP pinch is just neutral until you get a break to the upside, and you want to see a close. You don't want to just see an intraday pop. You want to actually see a daily close, weekly close, whatever time frame you're on. So in this case, NVIDIA kind of gave us that signal over the last few days that, you know, we're breaking out. SMH actually did this as well, so that was definitely something to keep an eye on. SMH actually was leading that, you know, just the entire semiconductor ETF as a whole. But you know, we got a classic breakout on Wednesday, simply retested that zone, and now we continue to move up, and we're up pretty well in pre-market. So NVIDIA is definitely kind of leading the theme here. MU was interesting; it was down yesterday, pretty much the only one that was down in that sector. And you actually saw Intel out of nowhere up 6%. That was very odd to see. But the fact that NVIDIA is breaking out like this, it tells me that there's still juice here. And, you know, for NVIDIA, at least, I think from the current price that we closed at yesterday, I think we could definitely be testing the all-time highs again. That zone that I have, 139.80 to 140.76 general area. And then from there, I'd reevaluate, right? A lot of people say, well, what do you think is going to happen in 6 months from here? I'm like, I have no idea. You know, first we need to walk before we run. So the first target I have is pretty much that 140 general area. But then that kind of sets up a lot of these other names, right? There's a lot of names out there that look good. MU being one of them. If we can go back to MU, I'll kind of give my thesis there. Same thing. We're kind of trading right at that April 19th pivot VWAP zone. You also have price kind of hanging on to the volume shelf. If you look at the pre-market action, I think it's back above that point of control, which is really what you want to see. But yeah, you've got a lot of names looking like this where you just have some consolidation, especially MU being down over 16% from where it was before earnings. And yeah, a lot of these names just look to be just pulling back in a healthy kind of environment. And then
Hold on, Jake. We're getting some Dawson in the chat pointing out lots of pinches out there these days, and I've noticed the exact same thing, right? So you've got you got a lot of stocks coming back to longer term support, whether it be from anchored VWAPs from pivot lows or gaps or whatever it is, and then now attempting to get back above the VWAPs from the highs, whether those highs were in April or March or something like that. But there's a lot of these similar setups. You noticing that?
Yeah, I mean, I think it depends on what you're looking at. There's definitely names One name that I was watching for a while and one name that I had to take a loss on yesterday was Disney. Disney, Nike, Starbucks. I mean, all these names are just getting, Celsius, another name, just got
McDonald's.
hit. Sorry?
McDonald's.
Yeah, McDonald's. Yeah, another one. So I think it depends. I mean, if you're looking at things definitely in an uptrend, they are definitely pulling back to those anchored VWAPs. But it's definitely a bifurcated market here where you're, sometimes just getting just very tunnel vision on just a few, sectors, and then other names are just getting crushed. So yeah, somebody asked me to look at McDonald's yesterday, and I didn't realize how down it was this year.
Yeah.
And so, I think the market's just still on that tech kind of heavy focus. And that's why, I think semiconductors, Dell is also looking great. Dell is one of those names where you look at the chart and you look at a couple down days. So I think we had a down day on, what was that, Wednesday and Friday. And it doesn't look like that much, but it's actually down 6% in those 2 days. And then, yesterday it was up 5%. So you've definitely got some pretty heavy volatility in these two if you are looking to do some intraday action. But yeah, Dell's looking pretty decent right here. It has been on this volume shelf for a while. And for those that aren't familiar with the term volume shelf, it's just, essentially an area on the volume profile. It's anchored just like the anchored VWAP. You just anchor it from a point, and then you look at not where, this volume is not showing you where buyers. A lot of people ask, well, how do I know if that's buying volume or selling volume? And what I always say is, well, it's both. I mean, there's a buyer and a seller for everyone. So it's just aggregation. It's just an aggregation of where that volume is taking place and where it's occurred. So
Yeah, I'll stop you right there, Jake. This is a good point that you're making. It's like, well, is it buying or is it selling? It's both, right? For every buyer, there's a seller. The key here is that there aren't an equivalent amount of buyers and sellers at every price.
Yeah.
So while yes, for every buyer there's a seller, just there aren't the same amount at every price, and that's what makes prices go up and down.
Yep. And so this is just showing you where that aggregation occurs, whether there's a ton of buyers and not a lot of sellers at a specific price. This is just telling you pretty much since February 21st, where has any volume occurred. And that's why I just keep it gray, because I just look at it as volume. So I'm not going to give it like a specific color. And that kind of keeps things a lot more, just a lot more neutral, and just kind of keeps your eye on what's actually important, which is where the volume has occurred. But yeah, Dell, I mean, a lot of these names have gaps above, and a lot of them are earnings gaps. So at least Dell, the 165.11, if you look at where we're at now, I'm not sure where this is at pre-market, but right around 146 close yesterday. The gap above is at 165.11. So there's definitely upside there. If you go back to MU, I think the gap is around 139.56 or so, give or take a few cents, 139.54. But you also have an anchored VWAP from that pivot from June 20th. I kept that anchored VWAP out just because I didn't want to make the chart too clunky. But that one's kind of in the middle of that gap. So you could have a little bit of resistance or potential resistance before you actually filled that gap due to that VWAP. But if you look at that VWAP, you actually did have an overshoot of it a couple times, or at least back in late June, that solid black candle, like 4 candles after the big move down from earnings. But a lot of these names, and this is how I look at the market in general. If I have an upside target, it's generally a gap. If I have a downside target, it's generally a gap. And those tend to be important levels of support and resistance, at least in the short term. So, so Micron, it's got that target. AMD is another one. I mean, AMD only took like 9 years to finally make a move, but that's kind of right in AMD's personality. I mean, you generally see nothing, and then literally out of nowhere it moves. So this is one that has a gap at 188.05. So definitely something to watch for potential area of resistance, but also a potential target above. But yeah, this one was a tough one to watch for a while. I mean, it was just literally looked like a barcode forever. So finally got that move, and And like AMD does, it just has those moves within like 1 or 2 days and just rips everyone's face off. So, you're definitely, at least for me, I think these were names that were set up over the weekend for my subscription. I mentioned SMCI, AMD, MU. So it was pretty semiconductor heavy there, and so far we're getting a decent move. SMCI up over 7.5% yesterday. Will we continue up? We'll have to see. But I think, one thing, and one important thing, is to kind of look at the broader picture. I know you like to do that as well. And if we go to just election years in general, if we go back to that first one, Spencer, the SPY chart, this is a chart that I've really been focusing on pretty much since we started. Not that one, the other one, but this is the one I'm going to go to after that as well. We pretty much had election year breakouts 2 times back in, that's IWM. I think it was let's see. We can go.
11, Spencer.
It's the monthly one. We'll touch on this one first. This one isn't the election year, but it still shows you, where we're at in, this potential cycle. So if you look at the big COVID move down, clearly, maybe the shortest bear market of all time. And then if you look at just where we broke out from those highs before COVID occurred, pretty much where we topped out before we had to move down, we had a pretty strong move to the upside. And when I first started showing charts that were starting to look bullish last year, a lot of people were talking about, oh, well, the interest rate environment's not the same and all of this. And we've just seen that really hasn't played much of a role. So if we were to look at this, and I know you like big bases, JC, this bear market, how can you not? We had a 41% move in about 60 weeks after the breakout from the COVID lows. And then if you look at pretty much from 2022 to pretty much the beginning of 2024, we were doing a lot of just chopping around. We're in a bear market. Things are finally calming down. And so this is a much bigger base that we just broke out of earlier in the year. And if you just overlay that same move that we saw after the COVID breakout, this is putting us at 670, 680, pretty much, by mid-ish 2025. So yeah, it's one of those things where the trend is clearly up, and will there be just really kind of a very focused set of names that are moving us up? I mean, you've seen Microsoft, you've seen Apple hitting new all-time highs. Is that just what's going to keep the market going? It's definitely it's a very narrow market right now. But if we do get some rotation and we do actually get some names to start participating, that's just going to be more fuel for the rally. But Spencer, I'm not sure if you found that other SPY chart. It was in the second email that I sent that I wanted to go over first.
Oh, my bad. Hold on 1 second.
That one. Yep.
Okay.
Yep.
That's why I was looking for. What are you talking about? Okay.
Yeah, I kind of figured that that would be the case. But this is kind of a longer term view. We were just looking at the weekly chart. This is the monthly chart. And if you look here, I mean, this is a chart that I've been watching literally pretty much since late 2023, early 2024, and it just shows, during these election years, you had a breakout back in 2017, pretty much out of this ascending triangle. Very similar setup. It's not going to be exactly the same. It's the market. There's nothing that's exactly the same, but very similar kind of move. We got the breakout, and if you look back in 2017, we just had I don't know how many candles that is, 9 or 10 green months in a row. And at this point, we've had pretty much since 2024, 1, 2, 3, 4, 5, 6, 7, 8. So 8 out of 9 candles have been green. So very similar price action there. And if we were to continue to mimic that and mirror that move, that kind of puts us close to the other chart that I just went over. That's around 660, I think, is where that arrow is pointing to. So it's always important to kind of zoom out and see where is the market. And obviously we're going to get pullbacks. If we don't get pullbacks, that would be little concerning, just because you always want to have these little resets in the market. But this is definitely something I'm keeping my eye on, and the leaders are continuing to lead here, and we'll just see kind of what happens from here.
Jake, you brought up gaps a lot. A lot of your upside targets are based on gaps. A lot of your downside stuff based on gaps. I'm glad you brought JD. We were just talking about China, emerging markets making new 2-year highs, emerging markets ex-China making new 2-year highs, China making somewhat of a comeback. When you look at Chinese stocks like JD, and if you could throw that up, Spencer, with so many gaps all the time in these ADRs, like, how do you think about that? You look for bigger gaps, or like, how does that work?
Yeah, so I mean, this is kind of why I pay attention mostly to especially on these Chinese names on the weekly chart. So I did shoot Spencer over a weekly chart as well. But I generally like to look, because I can't stand those gaps. I do think they're important. I do think they're important. I mean, you see it in TLT, you see it in GLD all the time.
Yeah.
So, to get the bigger picture, I do like to kind of zoom out a little bit. So in this case, JD, you do have an inside bar that formed yesterday right at this VWAP zone. So pretty much from the January 2022 pivot, pretty much the low from 2022. You've got price kind of holding in here, and there's a couple reasons why I like this. I think you would get more conviction if you did break last week's high on this. But the RSI, the Williams percent range are both oversold here, right at this VWAP zone. But if you go back to the daily chart, you'll see here that the MACD on the daily is also starting to curl up. Last time we had that, we pretty much just had an absolute face ripper once you did have that cross. But to your question, I mean, I do look at those gaps still. I do think they're important. I don't think they're respected as much as something that you'd seen Apple or Tesla or something like that, even though Tesla kind of blew right through its gaps over the last week. So I'm still using the anchored VWAP as kind of your main focus. So you can see here the May 17th pivot VWAP zone is kind of my longer term target on this. Just because gaps can act as short-term resistance and support, I did highlight that gap at 28.31 because it is, a level that could potentially see some resistance. This actually hasn't been as gappy as it has been in the past, at least on this move down since May. You don't have as many gaps. A lot of them actually have filled and then, continued down in this downtrend. But this is definitely a name that isn't in a very strong uptrend. So this is kind of going away from the theme that I was mentioning before with the semiconductors. But still, China is very cyclical. It has these really big drawdowns, and then literally for 3 weeks, it just goes straight up. So for that reason, this fact that the MACD is curling, the weekly chart does have these oversold conditions on the RSI and the Williams percent range. JD is one that out of all the Chinese names, I think does move, at least from a technical perspective, a little better than your Babas of the world or your Baidus. I mean, if you look at Baidu's literally at near all-time lows or at least very long-term lows, whereas JD is still up quite a bit from its lows that we saw back in January of 2022. So Baba, same thing. Baba is a name that I was trading and liked a while ago, but it's really hard to trade that one because it's just so choppy, whereas JD definitely gives a little more of a directional move. In the longer term side of things, do I think Baba could probably do pretty well? Yes, but I mean, from a trading perspective and just a directional mover, I think JD, from what I've seen, and I don't follow Chinese stocks, like it's not my expertise, but it's definitely, from the ones I've watched, JD definitely seems to have a better chance of at least following a direction with more than 2 days. You can see back in the last MACD cross, I mean, we had 6 straight up days in a row, and they weren't like 2% days. They were big days. So that's kind of what I'm watching there. And
are you trading options at all, or just common stock?
I have the options on this one, December 30s. So I bought pretty far out of the money, but I also bought like 5 months of time. So
how do you decide when to trade the common, when to trade the options?
I think it just depends. With the options, in this case, I mean, technically it's at what, 26.47, so that's $30. You know, it's still 20%, but the thing with JD, at least from when I traded it last time, I mean, those options moved like absolutely crazy. So, you know, JD, I don't think is as liquid as maybe Baba or one of those other names, but I just like to trade the options on this one just because you do have those massive impulse moves where you can really get a spike in the implied volatility and just the premiums get juiced. But I mean, either one, I think JD, a 20% upside move on common stock isn't bad either. So, you know, if you were trading like Baba, like I said, it may be a little more liquid in the options, but the problem with, you know, and that's another thing, right? JD has these multi-day directional moves, whereas Baba, you know, maybe has 2-day move up and then it's literally back to where it started on the first day. And then all of a sudden your contracts are kind of back to where they were. So JD, I like the fact that it does have these you know, 4 to 5 day directional moves, whereas, you know, something like Baba just doesn't really have that. It's just, for whatever reason, the personality of that stock kind of sucks. So, and JD's, I think, a $40 billion market cap, so it definitely has the ability to move a little more than Baba, which I think is like 150 or 160.
Let's take a step back while we have you here. I appreciate the thoughts and the idea flow. I mean, all of us here in the chat, and Strazza, myself, Spencer, we're always looking for ideas. So this is fantastic. Let's take a step back. How'd you get into the market in the first place?
So my dad one day, just when I was like 12 years old, said, you know, I want to create an account for you, like a custodial account, or he'd be the custodian, and I want to give you $1,000 to, you know, just put some money in the market. Wow. And then I think at this point it was Scott Trade way back in the day. So I had like a Scott Trade pamphlet of just different stocks that they had in their research report or whatever, and just bought a couple of those, and then
how'd you do?
Sorry?
How'd you do?
Well, I was doing fine until I met one of my buddies in high school who told me about this stock that was like, you know, 1/10 of a penny, and that his dad like owned a bunch of it, and oh yeah, oil and gas, you know, blah blah blah, and so, you know, I think I blew up the account pretty quick after becoming his dad's liquidity or going down the ship with his dad. So, but yeah, no, it's funny. We played hockey together, and then all of a sudden we were in like architecture class, and he just was, I forgot what it was called. It was it was literally like maybe 1/10 of a penny. So, you know, I'm like 13 years old. I'm like, holy crap, I can own 1 million shares with $1,000. Sign me up. But really, when I started to get more into the technical side, to be honest with you, during the financial crisis, I only looked at line charts. I mean, and I didn't even realize it at the time. I was just looking at basic trend. And so for a long time, line charts were really how I gauged like if something looked good. And a lot of the time, if I'm just like scrolling on my iPhone, a lot of the time I'll just be on the stock app and I'll see like the line chart and then go into the candles and all of that if it looks interesting.
There's a good lesson there in the line charts there, Jake.
Oh yeah. Yeah. They tell you what's really going on. Yeah. So that's kind of how I got started. And then in 2008, 2009, my mom and I actually, I don't think she was an advisor anymore at the time. She was kind of more on the, you know, bringing money in from clients, getting it over to the equities team. But her and I traded pretty heavily with her account, and then she gave me a little bit of money, and so we were just trading pretty much everything that went to nothing, like, you know, Genworth Financial, XL Capital, you know, all these names, to Wells Fargo, that were just, you know, just got AIG. I mean, AIG became a penny stock real quick. So, you know, there's a lot of volatility in some of these names that were actually pretty liquid. And back then I was just trading shares. I wasn't even trading options. And so there was enough volatility where you didn't even, one, have to worry about it. And two, options were not as liquid or even, you know, as accessible as they are these days. So it was mostly stock. And sometimes that's why, you know, I'll mention, you know, stocks are a way, you know, actual common stock is a way to also trade. You know, a lot a lot of people, and I don't blame them, have just been used to, options are kind of the only way to trade in the market. But it's maybe you get a little more move to the upside, but you also get a lot more move to the downside if you don't buy enough time or if you're out of the money. I mean, there's a lot of variables that you don't have to deal with when you're just owning common stock. So, I think that's just something that's completely dependent on someone's risk tolerance.
Last question. Are you going to do the same for your kid?
Oh, for sure. Yeah.
At what
Yeah.
age, though? At what age are you thinking?
I'm definitely in that boat of not wanting to force anything on him. I think if I, when I'm working, sometimes he'll look at the chart and I don't know if he just likes the colors or what, but
Yeah.
he does seem to be a little interested in at least the image. I don't know if that's just because I like to use yellows and oranges and things that catch their eye or what, but I would like to start him earlier than that, than I did, but I also would want him to be interested in it. So I definitely don't want to just be like, Kuba, we're trading today, or you have to look at the market today. I hope he gets to the point where he wants to look at it, and then from there, I think we would be able to take it from there.
You know what I did? My daughter comes up to me now. She goes, "Daddy, Daddy, show me Disney. Daddy, Daddy, show me Nike. Daddy, Daddy, show me McDonald's." And because a few times I've gone through and shown her the charts, long-term monthly candles of a lot of the things she knows. Like she knows McDonald's, she knows Starbucks, she knows Nike, Disney. I'm trying to think of some of the others that I've shown her. It's a nice list. And then she comes to me and she sees me working and she's like, "Daddy, Daddy, can I see Disney?" I'm like, "You really want to see that?"
No, Disney has not treated me well the last couple weeks. All of them. I mean, Nike. I was looking at the chart, I guess yesterday, and I mean, there's a little bit of a balance, but I mean, all of these names are just Lululemon, another one. I mean, just absolutely.
The 3-year-olds don't know about semiconductors or oil and gas or healthcare conglomerates. Like they only know the retail brands. I mean, right?
Yeah.
So
yeah, no,
she knows Netflix. She thinks YouTube is its own company. She doesn't understand Google yet, but she definitely knows YouTube.
Oh yeah, Kuba definitely knows that icon on the TV for sure.
Yeah, definitely. Daddy, Daddy, it's on YouTube. I'm like, "Oh, is it? Oh, okay."
Yeah, yeah. So that's kind of how we'll approach it. If he finds interest in it, and then we'll take it from there. But yeah, no, I think I do still think the electric vehicle infrastructure industry in the future is going to definitely be one to watch. I mean, my mom got an EV when she visited like a rental car the other day, and it was such a pain in the ass just to find a charging station. And then once you get it, it's like, the software is not, because then you have to download an app and then you have to like do all this stuff. And it's just, I think there's a lot of places where you can get a lot more optimization in that whole process and in that technology. So I do think, with Tesla moving up, that is kind of like the tide that's maybe going to start raising all ships. So yeah, I think that's probably another one to look into. And going into the election, that's, I think, probably going to become a talking point as well. Interest rates are kind of holding a lot of these back, solar especially. So, but that's short term. We'll see what happens in the longer term. But still, I mean, rates are still not that high compared to, relatively speaking. So we'll see if the market can kind of, accept that maybe rates aren't going to be pretty much 0% anymore. So we'll see how it goes.
I think we're there. Spencer, can you drop the link to where people can find Jake, where they can reach out to him?
Yeah,
Say
the
all
link is
kinds of
in the
nice things to
description.
him, right?
I just dropped in the chat though. I just dropped the link to Jake's Twitter in the chat, or X, whatever. So it's in the chat, in the description. Highly recommend. A tremendous follow. He's got what do you have? Like one of the largest subscriptions on X, right, Jake?
Yeah. I mean, if the App Store is telling me the right thing, yeah, I think it's the 4th largest. So yeah, I try to keep
They're
it.
definitely accurate, so you're good.
Yeah, so I try to keep it at a low price, so anyone can check it out, and it's really, it's really just meant to be another perspective and another way of looking at the market. And rather than, hey, you know, this is exactly what you should do. It's more or less just, you know, hey, another perspective. I keep it at a price where, you know, hopefully you're using other sources and other subscriptions maybe within the research process.
Awesome.
Love it,
This has
Jake. Thanks for coming, buddy.
It's been a long time coming, man. Thanks for coming on today.
We'll have him back soon.
Hey, thank you guys for inviting me.
All right. I'm serious when I say that I've been trying to get Jake on for a year, and we have both had to reschedule several times. So it took a year, but I did it. Got Jake.
Nice
Got
job.
Jake on here.
Nice job, buddy.
All right. Oh wow, lost track of time. 9:32. We're open. There's a few things I want to get to. The hot corner being one of them. We had some news we didn't cover as well. I want to get to that. We have a stock getting killed this morning, down 30%. That'd be
Who's down 30%?
Helen of Troy. You know what brands Helen of Troy owns? I didn't. I had to look it up. I didn't know.
School me.
OXO, which is a personal favorite for all your kitchen shit.
Yep.
They've got Dry Bar, Revlon, Braun, Vicks, Hydro Flask. I assume those are like high-end water bottles. Some brands that I know and that I like. You know, Braun's solid for the, you know, the razors and stuff, and OXO's always, anyway, they had earnings down 30%, so no bueno there. But should we do the hot corner?
Please.
Alrighty then. Where's my bumper?
So hot right now.
All right.
Talk to me about what we need to know.
Yeah, this is today's, right? So hot 8 jumps out. That's interesting too.
Hut 8 mining.
What are you guys doing here? So
Look at the hot corner.
this was announced 2 weeks ago by the CEO of Hut. It's apparently one of the good guys in the space, Asher Janut. Cotu is one of the Tiger Cubs. You know, respected as one of the best tech investors on the street. So this one stands out a lot, and it's got a great.
Notice the percentage filing. Any thoughts on that percent?
Yeah, they probably wanted to stay under 10, but it was just a $150 million investment, so big round number, and it just came out to 9.2.
I don't necessarily think that was on purpose.
What? I don't think
9.2.
so. Listen, they're being very public about it. So the stock started ripping. It was up like 17% the day this was announced. And it's just the follow through has been incredible over the past few weeks. However, you know, there were different ways to get involved in this one. It was really nice and tightly coiled around like $10. We were talking about it a few months back. But this trend reversal has not even been confirmed yet. Right? I think that happens at the pivot high from earlier this year, around $18. We also have that key high from summer of 2022. Right at the same level there. So I think above 18, I think this one could go a lot higher. And I know we're going to be talking about this one a lot more for the hot corner people.
I'll let you finish the hot corner. Guys, I just want to say peace out. I will see you on Thursday morning. I'm going to try to call in tomorrow and pop in if there's something interesting going on. So I will see you guys on Thursday and maybe through audio tomorrow.
Enjoy the game.
Thank you.
So today's hot corner was really all about crypto. We had a Bitcoin miner.
Yeah.
And we also had a crypto bank, Customers Bank Corp. So QB is the new, I don't want to say Silvergate or Signature Bank, but word is these guys took a lot of those accounts, right? They took a lot of that business, the crypto banking business that was lost, I guess, in March of last year when those two went away. So CUBI, I like this chart a lot as well. I don't know if we have the QB chart, but it's coiled up nice. And I think there is going to be a lot more beta there than these other regional banks. I also think you might see it move or trade in sympathy with a new leg higher for the cryptos. That's what we used to see with Silvergate and Signature during the last bull cycle. They almost acted like crypto stocks in late 20, early 21, right? During the craziness. I would expect to see something similar from QB. So look at, chart of Bitcoin. If we get that breakout, we talk about all of these, charts, Bitcoin, Solana, Binance against overhead supply. Those bases finally break out one day. I think a stock like QB does really well. Also, I love seeing Wellington in positions. These guys have become one of our favorites to track. And they're doubling their stake, right? So this is rather material. It's a significant increase. They're doubling it from 5.4 to 10.2%. So 2 transactions, 2 crypto stocks really stand out today. We'll be talking about both of these more in the future.
Question from the chat from James. How come Palantir isn't on Hot Corner? I'm guessing, James, are you referring to the insider sell from yesterday? I think that's what you're referring to. If I'm right.
Yeah, who said it's not on Hot Corner?
Well, it's not on
today's list.
Right.
So I'm not sure what the question is.
So if my assumption is right, and James is referring to the filing from last night about the insider sales, because we don't care about sells. We only care about buys. That's the answer. But Palantir is on the Hot Corner. It's in the universe because there is insider buying. So we talked about this the other day. I feel like.
What, Palantir?
Yeah.
Palantir is a Hot Corner name. It's in our universe.
It's just not on like today's table, but it's in the universe, no doubt.
Yeah, we talk about it all the time.
Yep.
One of our favorites. One of our favorites for sure. So,
No doubt.
Helen of Troy, did I hear that right?
Yeah, getting killed this morning.
Wow.
Down 30%. It's earnings. They were bad. They missed badly on
they still,
and the bottom line. They lowered their guidance. Not good.
What do they sell? They sell condoms?
I had to look it up myself because I didn't know. No, they own Vic, they own Braun, they own Oxo. If you ever need any cheap kitchen gadgets, kitchen toys, and go to Oxo. Yeah, so not great. Also, they bought back a ton of stock last quarter, and which they are now underwater on. So
you got it, one hole. Tell them. Hell yeah.
One. All right.
And then listen, I know the people want to talk about Nancy Pelosi. We had exciting.
Steve,
so, can we throw that table up?
This is starting to kind of annoy me. I feel like people have been lied to. They've been lied to in the sense that they've been led to believe that like Nancy Pelosi somehow matters, right?
You're
and
spot on, man.
It's starting to really grind. It didn't bother me before, but it's really starting to grind my gears.
Me too, buddy. Listen, there's an obsession. About this woman and her filings. People don't like to hear that she really doesn't outperform the market. Right? She's had more or less market returns. There are different data providers out there that are trying to pretend like she's got some sort of incredible excess return over the market since they've been tracking her filings. It's not true. They were making ETFs with ticker symbol Nancy, right, to track her trades. There's a bubble in tracking Nancy Pelosi. I don't understand it. She's more or less buying the biggest stocks in the market, and that's what she's been doing. You'll see her come out and be active in all these Mag 7 names every so often. She buys deep in the money calls. It's typically how she goes about doing things. You saw it with Broadcom most recently the other day. These calls are like $1,000 in the money, Spencer. It's insane. So what are you doing if you're buying deep in the money leaps, I guess? She was going out pretty far. I forget what it was. It might have only been July of next year. I think they were leaps. Anyway, you're giving yourself more exposure for a lower capital outlay, right? Buying deep in the money calls. Maybe you could get twice the amount than you could if you just bought the common outright. It's gonna track the price of the stock. Very little theta in there, right? It's gonna move as the intrinsic value when you're that deep in the money. It's just a way of levering up and being able to buy more. So they're savvy investors, right? They understand how to use basic call options, but I don't think they're doing anything crazy, right? If you were to look at their portfolio or their holdings, It's Mag 7 stuff. It's all the same stocks that are in the biggest indexes. So go buy the Nancy ETF if you want, but you could also just buy the NASDAQ 100 and let momentum do its thing.
Amen. Amen.
I don't know, Spencer. But yeah, I mean, this stuff, it's all over the internet when these filings come out. So I wanted to make sure nobody thought we missed it. We just don't really think too hard about it. I like the Tommy Tubbs. That's the political filings I'm here for. I'm here for the Tubbs.
Right. I want to switch gears for a second.
Yeah.
I want to go over to energy because now we've had 2 days in a row where a major energy company has come out and lowered their guidance. So today it was BP. They warned that weaker refining margins would weigh on their profits for the second quarter, which earnings are due out in a couple of weeks. They expect to lose, or these lower margins are expected to cost them between $500 and $700 million. There's also an impairment charge in the quarter of $1 to $2 billion related to some refinery in Germany. So BP is down today on this, and then yesterday with ExxonMobil basically saying the same thing, just without the impairment charge, but lower gas prices going to weigh on margins. So both of these are down today, and as I said, 2 days in a row that we've had an announcement, like basically the same announcement.
I thought Exxon said good things. See, that's how out of the loop I am.
Well, the market didn't.
Yeah. Listen,
lower demand, higher inventories, and lower margins for natty gas.
You know what helps all these things? You know what helps all of this negative news? You know what changes all that, Spencer? Crude oil, gasoline. Yeah, that's right.
Yeah.
Energy futures can just break out and start moving higher, which I have a feeling they might, at least, sometime soon. We're seeing other commodity contracts get it done. Maybe crude oil's next. Maybe crude oil catches some of that commodity market rotation.
Maybe
eventually. That would be good for.
I'm waiting for my XLE to do something. Sleeping.
See, but that's why you shouldn't be in it. This is good lesson in opportunity costs. You're trying to jump a large pattern breakout, this is the right kind of pattern for a person like you with your time frame to want to be in, but you don't want the opportunity cost that comes with it. You really want to be in above the range highs. Otherwise, who knows how long we chop around in this 80, 90-ish range.
I know. Could be a while. It's already been a while. Could be a while more.
But what's it pay you to wait? 2%? What's the yield on that? It's not bad.
I have no idea. I'm not buying. I don't look at the yield of an ETF before I buy it.
I'll bet it's better than you think, though.
Sure. Okay. I mean, it's not zero. I can tell you that. I don't know what it is.
I'm talking to you about dividends, and you're laughing at me.
No, because I don't generally buy anything with yield in mind, right? I mean, if I did, I would go look at some dividend fund or whatever.
I think that's a good approach, particularly when you're younger, right?
To
income investing.
For yield?
What?
To look for yield?
Yeah. As you're younger, you don't need to look for yield. You really want the price appreciation.
Oh! I thought you were saying I should be. Okay, I was confused there. All right. Yeah, I got you.
Older and older and grow your wealth. Yeah. The idea of income investing makes a lot more sense, right? Because it takes money to make money.
No doubt.
If you have a lot of money, then maybe 5% can earn you, a good chunk of return. But if you're starting out and you just graduated college, you don't have, big nest egg, then 5% in something, no. You want to double, you want to triple, right? You want to buy some growth stocks and then look at them 20 years later and be like, wow, look how well I did. And then take that money and put it in something that pays you 5%.
No doubt. Okay, then one more chart that I have. I saw this yesterday, but I missed the fun part. So can we bring in GLW up on the screen? They had earnings out yesterday.
I always wondered, does GLW stand for glassware? I think it does.
I assumed like Glassworks is what I assumed.
Glassworks? Okay.
Yeah. By the way, if you have not
Museum, I know I talk about this every time we bring up the stock. The Corning Glass Museum, it's somewhere in upstate New York. If you're ever there, you gotta go. It's the coolest thing.
I went to the Glass Museum last year and I made this.
Oh, it's so cool. Also just fascinating. It's a museum, but it's interactive, that blow glass like that, right in front of you.
Yeah.
I had such a good time. I didn't want to leave. I remember you telling us that you went.
Ton of fun. Anyway, what I missed in their earnings announcement yesterday was they're an AI stock. They specifically cited AI at the very top of their report.
Well, that makes sense.
Let me just read you. The outperformance was primarily driven by the strong adoption of our new optical connectivity products for generative AI. These results reinforce our confidence in Springboard, which is Corning's plan to add more than $3 billion in annualized sales in the next 3 years as cyclical factors and secular trends combine. So
I wonder if they're, Spencer, actually producing those little like fiber optic pieces that are used in maybe one of these chips or something.
Yeah.
Right. Is that,
I mean, it makes some sense to me. Anyway, the stock had a huge day, and I saw the chart and I thought you guys would be interested. So that's why we're talking about it. But
I'm not in XLE, Mara. Right. I can't speak for Sean, but I'm not in XLE.
I think you'd call this a base breakout within a long-term uptrend for GLW. Because
I like it. I like it a lot. I think everybody wants to be an AI stock. Oh, also, go back to the HUT. Throw the HUT chart back up. This is now an AI story. So Cotu or whatever, I think I'm butchering the way I'm saying that. They're like big in AI. They're early open AI investors. They're in all the big names. They're also just a big, mega cap tech investor also. But this is an AI compute story now, as much or more than it is a Bitcoin mining story. The ones that are successfully pivoting and the market is believing them, right, that they're transitioning to at least take on some sort of AI compute load along with the Bitcoin mining, those are the miners that are really ripping and showing relative strength. I think they eventually all try and pivot, but I think that building out an AI data center is probably something that's rather complex and maybe sounds easier than it is. So I don't think they are all going to do it successfully. And I think that's what the market's been trying to sniff out. But this one, getting a big investment like this, $150 million from a firm like Cotu, that is huge. That is huge, right? That is validation from the street.
Yeah.
They're now the largest holder of stock at almost 10%. So I love this name. I love it. I like the ones that are, doing the AI stuff, and I like their charts a lot. We're talking about Cypher. We're talking about Wolf. We're talking about Iris Energy. I think HUT joins that list.
As Sam points out, the Junior Hall of Famers was calling out GLW before I was.
Speaking of Sam,
huh?
I heard Kenny talking about the Jomama.
Okay. You want to talk about Jumia?
I want to talk about the
21% today.
Is it?
Yes.
Listen, we wrote a report.
What the hell's going on here?
Listen, this thing is a wild child. Spencer, you remember whose pick this was, okay? At the portfolio.
Yeah, you've talked about it.
Okay. I love this stock. I'm super long. I think it's perfectly actionable. Maybe not up 21%. We gotta. Is that true? Can I check? All right. Are you lying to me?
No.
Oh, that's fantastic. Look. Oh, yeah. So it's triggering our entry now. I think you could have jumped it. We talked about it down around 7. I have the VWAP shown there, right? You could have bought against those pivot lows. I think it's confirming now the trend is undeniably higher in this stock. I think this is a 2, 3, 4, 5x from here. I think this stock just keeps running. I think it can head back to those old record highs. And that would be a huge move. I think it's just getting started. It's a very volatile stock, right? But trend is up. And there are so many others in this whole Amazon of theme. If you throw up the Amazon of index, we did a report on this. I want you to drop the link in the chat, Spencer.
Oh, yeah. Where is this? Yeah, we did this the other week.
I think this is one of the best reports we've done this cycle. I think this basket of stocks is as exciting as any. You constantly hear me, pounding the table about these online retailers from other countries. I think this is the easiest way to invest in an emerging market story or a growth story somewhere outside of the USA, right? In the case of Jumia, we're talking about Africa. You have to know what these stocks are. You have to have them on your radar. We basically outlined all of them. It's not just Amazon that's breaking out and looks great right now. It's online retailers all around the world. Jumia is one of them. So we outlined levels and trades in about 10 different online retailers. Throw up the HEPs too. Not going to give anything away. The HEPs already hit one target. We got several more targets to go. This is another crazy mover. Turkish online retail. We got the Kazakhstan online retail. We got a ton of Chinese online retail, Korean online retail, Southeast Asia online retail. They all look good, is the point. So it's a big theme right now. I think these are some of the best stocks. I think a lot of them are coming out of just really fresh reversal patterns. And I love this group. So I heard Kenny talk about the Jemama.
Yeah.
And I got really excited.
First time you brought that up, I forgot what year it was. I thought it was 2020 for a second. But
so Spencer is being wise, but he's making a great point. This was one of those crazy stocks that everybody was chasing during the last bull market. That's how early we are in this cycle. This thing's just now getting off the floor. Brand new uptrend underway. I'm not saying it's going to do the same thing it did in 2020. 2020 was a crazy time, Spencer. I'm not saying we go back there, but we don't need to, right? And we probably are going back there. I'm just going to say it. This AI thing, this is very .com bubbly. We probably have a couple years to go, but we're probably going back to a place like 2020 and then probably a lot worse.
Maybe.
You're going to have some sort of melt up effect. We're not even recognizing the benefits of AI yet. I mean, barely. We're right on the cusp of it.
Yeah, that's true. The AI bubble has really only been in one consolidated group of names. Really hasn't spread that much yet. So
it is so early, and we are so back. The cryptos aren't even mooning yet. The participation in tech is absolute trash. Just finally starting to broaden.
Yeah.
Ain't seen nothing yet.
Dawson mentioned Intel. Yeah, Intel was trending this morning. I mean, it's down off the open because, of course, it is. But
trending to zero.
I mean, shit, man. The last few days have been pretty good for Intel.
Look, that's a sweet little gap fill move. Do we have a quick little daily of Intel?
I don't know.
We throw together a quick daily chart, Fonz? That's a sweet little trading pattern there. See that little base shaping up? You got the 20-day moving average curling. Showing you the short-term trend is maybe turning, and then pow, 1 day filled the gap. Yep, in and out. Take that for a quick hit. Intel stinks though. You can't own this. Can't own this.
No doubt. All right.
I like Snapchat right now. I'm very involved in Snapchat. I think that's a fresh base. These are the patterns we keep buying. I saw somebody mention Snapchat in the chat.
Well, you say Snapchat. My reflex is to look at pins because that's its only peer now.
Pins has been good.
Charts look not that different.
No, they don't.
A little bit different. Pins is a little bit better. But
Pins is better, right? That reversal has been in. So Pins was a hot corner name, been a hot corner name for like 2 years now. Is it Value? No, it's Elliot, right? Paul Singer?
Yeah. In Snapchat, right?
No.
Oh gosh, I don't remember.
Pinterest. I think it's in Pinterest.
Maybe.
But anyway, big hedge fund got there pretty early on, just as the trend was reversing.
I don't know. I don't know where Patrick is, Harminder, which is a bummer because he had some good stuff go out to his subscribers yesterday that I wanted to talk about. But it is what it is. We roll with the punches here on the morning show.
Patrick will be on Twitter Spaces, and maybe he'll make an appearance tomorrow. I heard we have a really fun show tomorrow.
Tomorrow's going to be interesting. I can promise you that. Also, Patrick will be on Chart Request Live today at 1 o'clock with Steve. Ironically enough, we did get a request for GLW in the inbox this morning. So I don't know who sent that in, but whoever it was, you guys will talk about it more later, 1 o'clock Eastern time. Right
Maybe
here.
we'll even do some live charting on the morning show tomorrow. I don't know. I think we're going to have the analyst team come and hang out, try to fill JC's shoes. Maybe
That'll be fun. Yeah, no GC and no me as well. Also, I don't know if I'm going to be able to do the show on Friday. I'll let you guys know. I'm up in the air, 50-50.
Okay. I mean, you guys just so busy. Always traveling, always doing
So,
something.
you know what's funny is I actually like never leave my house.
Really?
I'm leaving my house twice in 1 week, which is quite a lot for me. I
Look at
don't
you,
really go anywhere.
really putting yourself out there this week.
I'm trying to put it, well, you know, it's summer, you know, try to do things while
Well, I
Well,
hear
I
the
can.
weather has been spectacular up there, maybe too hot.
it's been awful. It's been hot as humid for me as it has been for you.
Oh, stop.
I
Bullshit.
swear.
Impossible.
I swear it was as humid in New York as it was in Florida.
Go to the beach.
Yeah, no, I haven't been to the beach yet. It's tough. But like I said, I don't get out much. All right, let's do some recess. If I can find my bumper, and then we'll get out of here.
The best course in Miami. That's a tough one, and I really wouldn't know, Matthew. I'm not the guy to ask. I've actually never once golfed in Miami. It's hard to go wrong in South Florida, but I play at the same golf course every time I play golf. It's in my backyard, and it's the only one we got for about 3 hours. So talk about a natural monopoly, right? And we were complaining about it the other day, me and the guys I play with, and I was like, none of these things are ever going to change, right? They're never going to take care of the grass more. The greens are never going to be better because they have no incentive to. The course is always packed, right? No matter how terribly maintained it is, we're going to go and play every weekend, no matter what. Like, why would they give you a locals discount, right? Or like a free round? Like that's so it's very different where I golf, unfortunately. What do you got, Spencer? I don't have anything.
I don't know if I have anything. I'll be honest.
There's no sports on this time of year.
I mean, there's baseball and there's the Euros and are happening, and there's soccer in America too. But or the
Olympics start. Yeah, nothing you said.
God, I can't wait. I'm such a big Olympics fan.
Yeah,
winter and summer,
right?
I love it, dude.
When do they begin? Late.
I think in like 2 weeks, two and a half weeks.
Yeah.
I'll watch anything. I'll watch archery. I don't care. I do not care. I'll watch all of it.
I love the Olympics too. It's fantastic. I always cry during the opening ceremony. Just love it. So speaking of alligators, though, I do have a recess. I think we're planning a little trip to the Everglades, which is something I haven't done since I was a kid.
I haven't been there since I was a kid either.
My grandpa, but you go on the airboats or whatever, you eat some alligator bites or whatever.
Oh yeah,
we're gonna go do that. I think Saturday, so that'll be fun. I haven't been to the Everglades since I moved down here.
That's the first time I ever tried to went to Cracker Barrel. Was in the Everglades.
Maybe I'll check it out.
Yeah. All right, we're done here. It's 10. Hey, thanks to Jake Wujastyk for finally coming on. I appreciate that. Thanks to Kenny as always, and like we said, Spaces in an hour. Chart Request Live 1 o'clock. That's it. Smash the like, go make money, and peace.
Bye, buddy.
Peace and love.